Time now for the word on Wall Street. Top investors watching your money. Joining us now, Horizon Investments Chief Investment Officer Scott Ladner. Also with me on set, Gregory Faranello. Greg, let's start with you on this one. We've got actually futures kicking a little bit lower this morning. But again, we had that rebound last night. All three major indices closing higher yesterday. The Dow jumping 300 points as fears subside over President Trump's tariff threats on Europe. Let's take a look at yields right now. There's a close last night, over 300. So we did come back. But, you know, the yield story is interesting because we got the Fed's preferred inflation gauge from November, and it did show elevation continues for the month. Both headline and core PCE running at 2.8% year over year. Still above the target of the Fed. Consumer spending is outpacing income growth. That does keep pressure on policymakers ahead of next week's rate decision. What do you see?
So we're generally constructive on the economy in general. If you look at where inflation is running, if you look at where GDP is running, it's a little difficult for 10-year yields to come down here. What has come down is the short end of the yield curve because the Fed has come down. You know, to the extent that I think over time inflation continues to cooperate, the Fed has a little bit more room to come lower here. But for next week, you know, the Fed's on hold. And
well, how many rate cuts are you predicting for the year?
We could get a couple of rate cuts in.
You're saying two?
Two,
okay.
Yeah.
All right.
But I think
Jim Lee says more than that. Yeah.
Two is better than none, yes. But I think those rate cuts, if they come, they're going to come a little bit later in the year.
Okay, yeah. Well, he did echo that sentiment as well. We do have a Fed chair change in May that we've talked about ad nauseum. Scott, so AI was the huge story at Davos, obviously. It was the conversation, a lot of panels on it. Jensen Huang was there, obviously, sat down with Maria. But really, around the world, you got this sense that there's going to be just not just billions, but trillions more dollars spent on AI. These executives believe that 2026 is the breakout year for AI monetization, which I think is important. Let me add in here, we did get Intel earnings. They did fall 13%. They did beat on earnings, but the first quarter was soft. There's worries about chip supply. Your reaction? Yeah, there is.
Look, and the Intel story is really kind of like Intel idiosyncratic. So that's why it's not really kind of hitting the rest of the chip space, the rest of the sort of the AI trade, if you will. It's it was their big takeaway for me, frankly, was demand's robust. So the demand side of things and sort of the story side of things on the AI trade is still pretty good.
Yeah, I mean, but and this is something Maria's been asking repeatedly, like when is the return on investment going to be for AI? I think there was a lot of pressure in these panels that were happening in Davos on these executives to say, well, when is it going to come back? Because are we overspending? When you talk about trillions of dollars being spent on AI, and that's what Jensen Huang said this, and another CEO told Maria that. I mean, that's an exorbitant amount of money. I think that fear is still out there.
It is, and but frankly, we don't have any kind of KPIs. We don't have any metrics to decide and sort of judge a company like how like AI are they? We don't know how to measure the AI-ness of a company yet. We're going to develop those, I think, this year. This is really 2026 is going to be the year where we diffuse AI throughout the entire economy. It's going to be a really important thing to watch and get a hold of. But we're sort of feeling our way through it right now.
Yeah.
But the reason why we are spending so much money is because this is sort of like an extinction level event if companies don't spend the money.
Mm-hmm.
If you remember 25, 30 years ago, if you didn't do CapEx related to internet, you just went away.
Yeah.
So you can spend the money and maybe you waste the money. But if you spend the money and if you don't spend the money and you're wrong, you're gone.
No, that's a very good parallel that you draw right there. I think when I was listening to Jensen Huang with Maria, he was talking about the fact that he's still getting orders for chips that are 2 years old, and I mean the backlog is just incredible. So that global demand is there, which I thought was so interesting. Let's look at gold, silver, platinum. This has been wild. Another record-setting rally this morning on metals has been such a crazy story. There are more geopolitical tensions, rate cut expectations. People are going, Greg, for safe havens here. Goldman Sachs, they're saying that by the year end, we're going to see a 10% jump on gold. They're calling for $5,400 an ounce.
I know. It's crazy. Well, Scott and I know back in the day, U.S. Treasuries used to be the safe haven, and they're not anymore for obvious reasons, right? I mean, inflation is running higher than expected. GDP is running hot. Gold has become, the safe haven. When I look at the chart on gold, and Cheryl, you and I have talked about this, it's parabolic right now. So it's a little difficult to buy it here.
Yeah, because you're worried you're at the top.
Well, you look at the
Absolutely.
chart. I mean, it looks like this, and look, it was a long time coming, I think, for gold to break out. It did break out. There are a lot of geopolitical risks out there. There are a lot of moving pieces. People are flocking to gold. Could we go to 5,400? I guess we could, but at the end of the day, I'm not buying gold up here.
Yeah, I don't know. I'm not sure. I don't think I want to go against Goldman Sachs on that call, real quick.
Yeah, look, I mean, gold and silver both are just, they're kind of a momentum trade right now. And so, again, Greg's point is well taken. I mean, treasuries are always going to be some sort of safe haven, but they're not the only safe haven in the game anymore.
Yeah, Scott Ladner, it's great to see you.
Thanks, Cheryl.
All right, Greg's going to stay with us, of course, all morning.